Cool, so welcome to the chart. So what we're going to do is we're going to apply the concepts that we just learned from the Introduction to Market Structure Theory video, and we're going to apply it to the charts. Now, we're going to keep this stripped back and simply just focus on identifying trends within the market. We don't want to start going into too much advanced multi-time frame analysis, understanding everything that we're going to go over in a later video. It'll all come together once we go over more concepts in more detail and stuff, but just focus this on understanding trends, being able to identify bullish market structure, understanding bearish market structure, and understanding consolidations and ranges within the market. What we do is we use our time frames because we have multiple swing structures and swing points in the market, right? And you can see I have a crazy amount of time frames. I don't use them all for structure, but we use specific time frames to help us read the swing points within the market, and we can do this on all time frames. So what I would suggest that you go ahead and do is just go ahead and have a look on any pair that you like, whether that be I trade euro dollar, but whether you want to trade pound dollar, any Forex pair, any crypto pair, anything that you like, just go ahead and pick that pair once you've watched this video and just practice what we're going to do here. You want to be able to just, at the end of this, just be able to spot, understand and identify a trend, a bullish trend, draw out and label these higher highs and higher lows, or if you're bearish, lower lows and lower highs, because we want to train our eyes to be able to see these, because the way that when we go into this in later detail is that I teach that I want to show you how to identify structure through data and not time frames. We know we use our time frames to help identify swing structure, but we want to learn how to read structure as a whole and what we can see, and to train our eyes not to so much be religious on this time frame has done this, so this must happen, but we want to be able to train our eyes to understand what price action is doing. So what we're going to do first is we're just going to go ahead, I'm on the 1 hour on EU, and we're just going to start drawing out swing structure, understanding higher highs and higher lows, lower lows and lower highs, and like I said, just train your eyes just to be able to recognize and understand these trends. Okay, so what we've got here is we're going to start here on the 1 hour chart on EU, and we're just going to start lower down here. So we can see that we've had a breaker structure here now to the top side, right? Now when we take out a new lower high in the market and we put in a new higher high, this is giving us an indication now that we can start seeing bullish market structure. So what do we know that we have? We've put in a new higher high within the market. We've pulled back, put in a new higher low before a new higher high in the market. And how do we denote that? We get a breaker structure bullish. We take out the higher high, price pulls back, puts in this low, which leads to a breaker structure, which has taken out the higher high. And like we know, what do we expect? The higher low never to get broken. So that's what we can see has happened here. We had a higher high, price has pulled back, put in this low, which has led to a breaker structure, which is now put in a new higher high within the market. So we know if bullish market structure and an uptrend is to continue, what do we expect to see happen next? We expect to see a new higher high within the market and our higher low not to get run. So we can see here that this is our higher low and it's protected, and we will go through a section understanding protected highs and lows within the market. But this, when in a bullish trend, is our protected higher low, so we don't expect this to get run, and then we expect to see a new higher high. So we expect this currently being our higher high. What does price do? Price pulls back, and then we get breaker structure once again to the top side. So we get this breaker structure here, which now what happens? We leave behind a new higher low within the market, and then we put in a new higher high within the market. And same thing again, we want to just continue to follow this. We can see higher high in the market, higher low, breaker structure. Leaves behind a new higher low within the market and took out the higher high. So you can see here, higher high, higher high, higher high, higher low, higher low, higher low. The highs are consistently being taken whilst the higher lows are never being broken. And these are the characteristics of a bullish trend. Now just plot on and understand and try and identify these. So if we just go onto a green chart here, we can see this bullish market structure. So this is like a clean example. If you remember, we said that in the most recent video, that was the first one that we did. Sometimes it's not always that clean. This is actually quite clean, but you can see here prices come in and put a higher high, higher low, higher high. Then you can see what we've got here is this pullback before we put in a new high, higher high, a little pullback once again, and prices put in a new higher high. And what we're going to do is just continue to follow this. So we've put in here a new higher high, which we'll identify here. Prices then pulled back, okay, and what's it done once again? Price has led to another breaker structure. So we can see here once again, we get a breaker structure to the top side, the higher high gets ran once again, and the higher low never gets broken. Now what do we understand? We need to understand that the higher low, in this case, the protected higher low, is the lowest point that's led to the breaker structure. That is your swing low, okay? So we need to understand that the higher low is the lowest point that's led to the break. So when we go to our higher high and we draw it down, we can see where the breaker structure was and the lowest point, which was this point right here. So we understand now that this is our new higher low within the market, and like again, we expect as long as this bullish trend is to remain, this higher low shouldn't get broken, because we know what do we expect to happen. See the high high get run. So what happens? Price gets a breaker structure, price then pulls back once again, puts in this new higher low before we get a breaker structure to the top side right here. And then once again, what happens? We ran the higher high, we put in a new higher low that's protected in the market. We understand that the higher low is the lowest point that's led to the high. Now, when we go into multi-time frame analysis and things, you will be saying, you know, why is this not a new higher high, higher low, higher high, higher low? It is, but when we go into multi-time frame structure and things and understanding swing points and internal structures and things, it will make a lot more sense. But just understand for now that obviously we've got higher high, higher low, which led to this higher high. You know, we're just looking at true swings. So look for the main down move and then the up move, down, up, down, etc. So we put in this new higher low within the market, and we've got a new higher high. Now I'm going to provide diagrams and show you how we look at breaks of structures, but what we know is that to confirm a higher low within the market, so if I just draw on what we had before, to confirm a higher low within the market, we need, let's just say this is the higher low, we need to see a break of structure with a candle body. We need to see a convincing break of swing structure to confirm this as a protected higher low and a confirmed higher low within the market. If price does this, which is what we've got here, we've tried to put in a new higher low, and what happens is price wicks above the high. So the swing high doesn't get broken, it just wicks the high, fails to break above it, and then what happens is we then start to pull back down. What this indicates to us then is that the higher low is not protected, right? So it tries to maybe do this and then tries to break, and we just wick above the high, we don't break it, and then what happens is we can then see price start to pull back. So this now is not a high low in the market, and this is what we call a weak low, because it's failed to take out swing structure. So we can expect to see these get run because they're not a confirmed higher low. This is not a higher low until we break swing structure with a convincing candle body. Okay, so we can expect to see this get run. Before then, we put in the real higher low that takes and puts in a new higher high. So we'll go into this more when we come to weak and strong highs and lows, but just understand, just to understand the basics, is that we have this new higher high within the market. Now, like I said before, we want to see price break through it with a convincing candle body. But what does it do? We get this breaker structure, or what we call a breaker structure, but you can see here that this has broken through the wick. It's not broken through. If we look at this candle here, it's gone and it's broken nicely. It's a massive candle body. If we look at these, you can see it's broken through with a candle body. The swing high is broken through with a candle body. If you're not sure what candle bodies are, it's this whole on the candle, you can see there's a body, and then these little end bits are the wicks. If you look at all these breaks of structures that we've drawn on so far, they've all broken through with a candle body, candle body, candle body, and eventually it has broken through with a candle body. But if we look at this, price has broken through it with a wick, no candle body break. So when prices try to pull back and put in a new higher high, this has failed to put in a new higher high. So what this becomes is what we call a weak low within the market. So we expect this to get run. We'll go into this in a later video, but this is not a higher low in the market until the swing structure has broken. So if this would have broken through here with a candle body, then this would have been a higher low, but because it's just wicked, and then we can see here that we've had a change, well, again we'll go into this in later videos, but then we've had a change of character, which is showing price is now pushing lower. We expect this low to get ran, and then what this does is this comes off demand levels, and then what's it done now? This has now led to a true breaker structure. So then what we do is we come to the next high, which is this, and you can see now we've had a convincing candle body break leading to this high. So this low has led to this high. And now this is our confirmed high low within the market, because this low is the lowest point then that's led to the breaker structure. Okay, and once again, same thing applies. Again, this will make a lot more sense when we go into multi-time frame analysis, yes, this is a higher high, higher low, higher high, but we're just understanding true swing points at the moment, which is obviously that this low has led to this high. Okay, so once again, we've got this confirmed high low within the market. We understand that as long as this bullish price action is to remain, we look to see the higher high get run, and we look for this breaker structures to the top side, which is exactly what we get. So if we look once again, if we just then look at the lowest point that's led to the breaker structure, we have this higher high within the market. We've put in this higher low, because we won't forget it's the lowest point that's led to the breaker structure, which is this. So now this is our new higher low within the market that we don't expect to get run, and then we can see here that this now is our new higher high within the market. So if we just draw on with our highlighter tool just to understand and draw them on, we can see them just there. Now let's just go back and look back and remember what we talked about, the characteristics of bullish market structure. Look at the higher lows. Higher high gets run, higher high ran, higher high gets run, 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 and then this higher high gets ran. Okay, those are the characteristics of a bullish market. You can see, look, every single higher low does not get broken. Higher low never gets broken. Higher low never gets broken. Higher low never gets broken. Same here, doesn't get broken, doesn't get broken, doesn't get broken, doesn't get broken. And then obviously we can identify again the lowest point that's led to the breaker structure, which is this point here. Okay, so this was our new higher low. Okay, and that is the characteristics to understand that we are in a bullish market. Okay, but now what have we got? Okay, now you can see, we know if price wants to continue to push up, we expect to see these higher highs and higher lows be respected. We expect each high to get ran, or the swing high, and the lows to not get broken. But what have we had now? If we have a look, we can see here now that we've got a new higher high, and what we'd expect to see is price to come and put in a new higher low before a higher high. But what's happened here? We've had a breaker structure to the downside now. You can see this now. The higher low has been broken and been violated. So what this means now is that we've now changed trend. If you remember from the last video, we've now gone from a bullish market to a bearish market. So we've now got a new lower high within the market. Okay, so now this is how we pull back in the market now, because the higher low has been broken. So now what do we expect if price is in a bearish market? We expect to see the lower highs not get broken. So what do we see here? Now we've put in a new lower low. It's the lowest point, sorry, now it's the highest point that's led to the breaker structure. So this is our swing low. We go up to the swing high, which has led to this breaker structure right here. So now this is our lower high within the market. What does price do? Price pulls back, it puts in a new lower high, and then we get a breaker structure to the downside. So now we've had that breaker structure to the downside. We know that what this has done has given us now a new lower high in the market, okay, which is this point right here. And again, as you can see, it's the highest point that's led to the breaker structure. You can see we're breaking through getting breaker structures with candle bodies. Okay, and now this is how we know that we're now in a bearish market, because as we can see, the lows are consistently being taken whilst the lower highs are never being broken, and that is the characteristics of bearish market structure. Once again, what do we get? We get another breaker structure here. Okay, it's the highest point that's led to the breaker structure is our new lower high. So we can see that this is the new lower high within the market. Led to this new lower low, and then what do we get now? What do we expect to see happen within the market? We expect to see a new lower high before a new lower low. But then what happens? We can see once again now that this bearish market structure, we've had now a breaker structure back to the top side. We can see now that we know we expect to see a new lower high within the market before a new lower low. This lower high shouldn't get ran if price is going to continue to push down. But now what's happened? This high has been broken, and now we've put in a new high. So, like we said before, this is now giving us an indication that we are now in another bullish trend, because the lower high has been violated and we've had a breaker structure with a candle body back bullish or to the top side. So what do we know that this has left us behind with now? We've now got a new higher low in the market, okay? And what we're going to understand and look at here now is we can see that this was the low that's led overall to this swing high. Yes, these are pullbacks. Again, I'm not going to go into multi-time frame analysis too much, but we're just going to look at overall swings, like I said before. And just understand that this is our new higher low that's led to this new higher high right here. So this is our swing high, and understand what we said before, talking about the fail to breaks. You know, we need to see price break through with a true candle body to confirm a breaker structure. So if we look at this point here now, this is our new swing higher high. Price has tried to pull back and then tried to break and put in a new higher high within the market. But what's it done? Like we said before, it's failed to break above this high with a candle body. It's not broken through with any sort of convincing candle body break. So what we know is that this low, because this, we tried to put in this as a new higher low in the market before a new higher high, but it's failed to break this low has failed to take out the swing structure. So this is not a higher low in the market, because it's failed to take the high with a candle body. So we know it's weak and we expect it to get ran. But what we need to see now is a breaker structure above this wick. So this is our new actual high we need to see the break above, and we need to see this breakthrough with the candle body. But what do we see happen again? Price has tried to put in a new higher low in the market before a new higher high, but price again has wicked the high. So this again is not a breaker structure, because we need to see this break through with a candle body to confirm that this is a new protected higher low in the market, that this is our true higher low in the market. But obviously FTC stands for fail to close. We've failed to close it once again. So as we stand, we are still bullish, but this is our current higher low in the market, and this is our new higher high. So we are still bullish, and this is our higher high, and this is our higher low. Okay, but what we need to see now is a true break above this high here to confirm bullish market structure, and then, or our new higher low, sorry. And what do we get? We get our new breaker structure. Okay, so now we've respected the bullish market structure, which is the obviously higher low, higher high, and then obviously now we'll just identify the new higher low. So we know that this is the higher high. Then what we do is the lowest point that's led to the breaker structure. Okay, so now this is the new higher low in the market. Okay, and this is the new higher high. So once again, if bullish market structure is to continue in a bullish trend or in an uptrend, we know that price should not break the higher low, and the higher high should get run. Then what happens? Once again, price is pulled back, put in new higher low before a higher high. Okay, we get a breaker structure to the top side once again, leaving us behind our new higher low in the market, which is obviously what we said before, it's the lowest point that's led to the breaker structure, which is this point right here, like we said before, which leaves behind this new higher low in the market before a higher high. So like we said, when we just go back to the absolute beginning, we've just plotted on some swing structure here. We can see higher highs are consistently being taken, and that is how we determine that we are in an uptrend. Then we obviously, with that, the higher lows, which I'm highlighting here, never get broken. But then once we get a breaker structure, and let's just say bullish market structure, then the higher low gets violated, and then we start seeing these lower lows and lower highs. That indicates we're in a bearish trend. Okay, and obviously once again, once the bearish market structure gets violated and we get this bullish breaker structure once again to the top side, we can then see these higher highs and higher lows being put into the market. Okay, so now once again, we're going to go into this part here because I know this shows bearish market structure, but we've put in this new higher high in the market, and then obviously this was our higher low. What do we get here now? We then get this bearish breaker structure. Okay, we've now had a breaker structure to the downside with a candle body break. And obviously, because what would we expect to do if we're in a bullish market? We'd expect to see the higher high get broken, but what's happened now? The higher low has been broken. So what do we know have we got now within the market? Well, now we've got bearish market structure, and we can start to see price start to sell off now, because we've had a bearish breaker structure and the higher low has been broken. So we know that we've now got a new lower high in the market. So again, it's now the highest point that's led to the breaker structure, which is this lower high right here. So this is our current lower high within the market. Okay, and then once again, what do we know? What do we expect to see happen? We expect to see a new lower low in the market and the lower high not to get broken. So what do we get? We get, this was the lower low. What do we get? We get a breaker structure once again, which then puts in, we can see the lower high never got broken. Okay, and then what do we see? We then put in a new lower high. It's the highest point that's led to the breaker structure. which is now giving us our new lower high within the market. It's consistent, and this is just the basics to understand, and I know I'm being very repetitive here, but it's just so important to repeat it to yourself, see it play out over and over again. We can just see lower high never gets broken, lower high never gets broken, and we know if prices to continue in a downtrend, we expect to see the lower lows get broken, okay, then the lower highs not to get run. So we can see this was our protected lower high, lower low, price breaks this again, the lower low gets broken. Once again, we know we're looking for the highest point that's led to the break, which so now this is our new lower high within the market, which is now giving us a new lower low. And then once again, we know as long as prices to continue in a downtrend, we expect to see the low get ran before the high. Price then once again for the final time pulls back up and then gets that breaker structure to the downside. But that breaker structure to the downside, and then we've got a new lower high in the market. So like we said before, bearish market structure, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. The lower highs are consistently not being taken, whilst the lower lows are consistently being broken. That is how you spot and identify bearish market structure, and vice versa. When it comes to bullish market structure, we are seeing these higher highs consistently being ran, whilst the higher lows are never being broken. So that's just the introduction to market structure. I hope that makes sense. I know I went on a lot, but I just want to show you and keep repeating it so you can see it happen over and over again. Take what I've shown you. You might not understand it first, but you've got to start plotting it. You need to start seeing it play out for yourself. You need to just get a feel for it. So go on any chart. There's absolutely anything and everything you can trade. So go on euro dollar or find something that's got clean structure. Don't start trading like euros are, because that's got the worst market structure. Go on things that have got a lot of volume in them, you know, cryptos, you know, Bitcoin has got really nice clean structure. Any Forex pairs, like the major Forex pairs, you know, and just start plotting. Use different time frames. You don't have to use the 1 hour, use the 4 hour, use the 15-minute, use the weekly, yeah, and just understand and plot these different time frames, understand and plot these different highs and lows within the market, and get a good understanding for it. So hope that's made sense. We're going to move on now to the next part of the market structure course.